Good afternoon, everyone. I hope you all are still awake and ready to learn about money. What do you think when you think about money? What comes to your mind? I can't hear. Have more. Okay. Have more, have everything. What else? Happiness, peace. Okay. iPhone? What else? Yeah. Retirement planning? No, I'm good. Yeah. I should be audible till the end. The last person there can hear me? Yeah, so money is which makes you happy, right? Most of you have told me that right now. So I'll try to make you more happy by the end of the session if you're going to be attentive and listening to me throughout. Do you guys promise? Okay, done. Right, so I'm going to talk about basics first. That's our agenda. I hope you guys can see it. Right, so what is professional indemnity? Do you guys know this terminology? No? Okay. So you guys are students, eventually going to be practitioners, right? So if I'm a patient coming to you, and if something happens to my eyes because of you, I will sue you, right? Because Dr. Google and Dr. YouTube teaches me that I can go to court and sue the practitioners who will cause me harm. पता है ऐसा होता है? Right? So professional indemnity is an insurance which every practitioner should have so that you are safeguarded from any such things happening to you. Okay? So I'm going to tell you more about it. Right? Why you should need it? Because of the aware consumer. These days, patients or clients, aap jo bhi bolo, they are very smart. They know much more on the legal side also. Right? Cost of legal services is very much higher. Right? So if today you didn't have a professional indemnity and I plan to sue you, then the cost of legal services, the time involved to get all this through is going to be much more higher, right? So if I have taken this professional indemnity insurance, then all that headache is gone, right? So again, your reputation is at stake. This happens with you, right? Compensation and protection is also taken care by the professional indemnity. Now, again, you have to pay legal fees and charges if you are proven that okay you were on the mistake part which happened to the patient, then that money is still going to be paid by the insurance if you had that, right? So how do you get this? So you all are connected to Optometric Council of India. Make sure that you be a part of the association, plus also you participate by paying that smaller premium. So example, if you take a 25 lakh professional indemnity by yourself, independently, that might cost you some 20 to 25,000 rupees. But if you do it through the association, it might cost you just 2 to 3,000 rupees. So imagine when as a group, you all plan to do it, turns out to be cheaper, right? And it's very, very important, integral part of your practice, right? So that's on professional indemnity. What will not be covered? Any guesses? Right? The course of treatment or procedure, which could be surgical and laser, which is not supposed to be part of your practice, right? Though you know it or you have done it ever, or you've seen your colleague or a friend doing it, but this will not be covered because it's not part of your practice. So make sure when you are part of professional indemnity and when you are trying to use it up against you when the patient is trying to use it, then that point of time, if you did something which was not part of a practice, you will not get paid. So that time you should not feel that I paid the premium and I'm not getting covered, right? Right. So GST, I'm going to run through this because rules keep changing about it, but practitioners should know this, and you guys are going to go in that, the next step, you should know basics at least. So goods and services tax, right? So when you are a buyer, right, when you're buying frames, lenses from the manufacturer, basically that is the time when you're paying GST. Right? So there's a cost, and then you add, the GST is added depending upon the slab that is fallen on, and then you pay the total amount. And if it's a luxury brand, then you pay 28% as GST. Now, when this is happening, you are the buyer. Now, when as a patient I come to you and say that, okay, mujhe chashma banwana hai, that is the time you become a seller, right? So when you're going to combine the lens and the frame, right? So that time you can charge me a GST when I come to you as a patient, right? And when you bought, you paid. When you sold, you charged, right? So when this buy and sell thing happens, इसमें आप set off, आप सुनते रहेंगे बहुत time. This part of transaction is set off. Okay, you can actually take it as a set off in your practice. Yeah, but when will this happen? When you are crossing purchase or a turnover or income of 20 lakhs and above. This does not happen immediately. So you needn't worry if you're going to start your practice today. Right? So a little bit, because you guys are very, students, you're going to go out and eventually be a practitioner. So little steps on the financial side, legal side, Aditya sir is going to speak after me. So make sure that you're part of the state council. Very important for getting latest updates, especially now, since we spoke about professional indemnity, that you will be aware about it. Availing business loans for development. So example, you want to buy any instruments, buy a commercial space for your clinic. Then at that point of time, when you're going to avail, there are banks who are going to give you the loans. Now, when they're going to give you the loans, that point of time, apart from banks, there are NBFCs, okay? Non-banking financial corporations, like a Bajaj Finance or a HDFC Limited or so many others. So you can also approach them if banks are not willing to give you as per your, maybe if you don't have a credit history or you don't have sufficient relevant documents, because banking rules are a little stricter. NBFCs would charge a little higher interest and still give you that loan, okay? Right, so equipment loans, I'm being told that if the manufacturer, you approach the manufacturer, they might give you interest-free loan. Okay, so if you've been practicing good or you're going to upgrade your instruments and all, so your first level without paying the interest is your manufacturer of the instruments. So try from them too. It might not be available for everyone, but it's, पूछने से मिलेगा. अगर try नहीं करोगे तो नहीं मिलेगा. Right? So I'm a Gujarati. When we set up businesses, we say that 1,000 days it takes to break even. Okay? So when you're going to set up a practice by yourself, financially, okay, I'm going to talk about the financial side. So 1,000 days, so roughly 3 years. So 3 years तक आपको ये नहीं बोलना है कि I set up my practice and I'm not making money. First 3 years are all about, creating those connections, building up your patience, doing your things right. So have it in mind that when you're going to be an entrepreneur, independent, it might take 3 years to break even. Or maybe if you are in a city or a town which is not of too many optometrists, then it could be faster also. But standardly, it's a 1,000-day process where you break even. Right? Very difficult part. Do you guys know what is accounts? Not the bank account though. Financial accounts. Financial year कब से कब होता है? Oh, that's lovely. So 1st April to 31st March is generally a financial year in India. Right? So when you guys are going to start earning money, you definitely have to file returns. Right? So when you're going to file returns, you will not file, you will have a chartered accountant hired who will take care of it. But अगर आप documents maintain नहीं करोगे, right? You need to maintain documentation. If those documentations are not maintained from the start of the year, right, then you might not be able to club it for the whole year and give it. Then you'll procrastinate, and eventually you'll feel, okay, I don't understand all this, rather not do it. And if you don't file your taxes, we'll not have better infrastructure in our country. And if you want to travel abroad, take up loans, you need to file returns, right? So if you have to apply for visas, you have to show your ITR that you have income and you are eligible to go, okay? So maintaining books of accounts to have a successful practice is one of the biggest mantra. So make sure that you're going to maintain your books of accounts right. Hire a CA who will tell you the basics of it on, how do you start, what are the things you should keep it in mind, and basis that you can do it quarterly basis on the update. Right? So जब पैसे कमाओगे तो manage भी करना पड़ेगा, right? Right, so I'm going to talk about this, plan your finances. Right, so very simple thumb rules of life I'm going to tell you. This will not change. At any age band you start, this will remain the same. You go to any country also, these rules will never change. Right? So the first rule, get a cash flow system in place. Right? So what does it mean? Split savings from spending. Spending करना किसको आता है? अच्छा किसको नहीं आता है? I would rather ask that way. किसको नहीं आता है? 50% सेल सबको आता है? अच्छा लगता है? 50% Amazon sale? Does it sound good? Myntra sale and all? Yeah, but 50% तो देना पड़ता है. कौन देता है? खुद देना पड़ता है ना? तो कभी सोचा है कि do I really need it? Right? So that is why you need to have income account, spend account, and invest account. So when you have, say right now you might have a pocket money or a stipend, right? So if this money is coming to you, you need to break it up in 3 parts, right? Income aaya, that's one part. Spend karna hai, standard. So spending is not taking your girlfriend out, but it's basically having a standard expense of rentals or any basics of your travel, which is related to your day-to-day expenses, right? So that's on spending. Now, after spending whatever money is left, okay, you might say, bachta hi nahi hai, kya kare, right? So rather, split it, okay? And when you save money, it is like half job done. That money has to be put to work. So you have to have investments done. So savings is one part, investment is the next part of it. So if you don't, you save money, let the money sit in the bank account, you're feeling rich about it, the bank is going to be happy about it, okay, I have so many bank account holders having money in the account, but then that money is not put to work. So you have to put that money to work by investing, okay? Right, so I'm going to still further talk on this. How does it help? Tells us how you can spend in a month. How many of you write your expenses or use any apps? Okay, so very less hands have gone up, and okay, somebody can stand up and tell me why do you do that? Just to have control, right? Or at least know where the money is going. So a big lesson for all of you. Very few of them raised hand said, we write our expenses. So it's always important that you bifurcate and you should know what is the cash flow incoming and outgoing also. Right? As you separate, so we spoke on budgeting, then it helps form a habit of saving. Right? Keeps you out of debt. Otherwise, it's a vicious circle that you take a loan, to pay another loan, you take another loan, and then that cycle goes on. Right? So rule number 2, build an emergency corpus. So during COVID, right, we had situations when I think your practice, I mean, your field was a practice where you could not go near to patients so fast. Right? You guys took a while till second wave went off and further, right? So if you didn't have an emergency corpus, then you're stuck, right? Your overheads are going on. So if you say you have a clinic which is on rent, you're paying salaries, you're paying utilities. So you can't say that I don't have the money because my practice is not on. So you need to create emergency corpus, right? If you want to take a sabbatical for education, right? You want to upgrade yourself, then that's the time when this emergency corpus will help, right? If you guys are on a job and there's recession, right? That is the time it will help. Medical emergencies in the family, that is the time when your emergency corpus will help. COVID we saw, right? Something like a pandemic happens, right? Maternity expenses. If women are going to take smaller breaks, then yes, we like throwing baby shower parties. Then that point of time, that expenses also will come up, right? Then that's the time you save on this money, which will help you. Right? How much? 6 months of living expenses should be kept aside, right? Maximum 2 years. So when we come to city of Bangalore and we speak to clients who are into IT, their job is most volatile. For them, we tell them that, okay, because today you have a very good job, you are a senior vice president, but tomorrow this job might go away. So we try to create 2 years corpus for them because after reaching a certain position and a lifestyle, you can't come down from that. Today, if you're using an iPhone and tomorrow if you lose your iPhone, I'll tell you use an Android or Vivo or something, Oppo or something. Will you use it? No, right? So then, this example should not be related to the emergency corpus though. But yeah, this is a standard lifestyle thing that I was trying to explain, right? So 2 years, where it should be in form of fixed deposits, or it should be into a category of mutual funds called liquid funds. So a very interesting category in mutual funds called liquid, wherein when your money is in your savings account, do you know you earn interest? How much? 2.5 to 2.75. If your account is in IDFC with a 2 to 4 lakh balance, then it's a 6% interest. But standardly 2.5% to 3% ke beech mein. Now, when you keep this money in the bank, this is the interest rate that you earn. But when you are having this money kept in mutual funds category called liquid fund, this will give you around 4.5 to 5%. अच्छा क्या है? 2.5 या 5? तो कभी try किया है? So please try, right? So that was on rule 1, rule 2, and now we go to rule 3, right? Give your money and equity exposure. Stock markets में कितने लोग invest करते हैं? Okay, all right. So can you see the chart here? Clearly visible? At the back, you guys can see it? Yeah? So you can see 4 lines, gray, blue, orange, and yellow. Visible? Yeah? So this is a chart which says, in 1986, if you invested 100 rupees till 2017, what would be the value of it? So if you can't see, I will read out for you guys. If you put money into fixed deposit in 1986, your 100 rupees invested in fixed deposit will grow to the blue line which says 1,500, 1,550. Now when you put your money into PPF, 100 rupees invested in PPF in 1986 has grown to the orange line which says 2,095. Now if you invested this in gold, right, everybody's favorite asset class. So gold, 100 rupees invested, grew to the gray line which is 1235. Okay, and the Sensex. Okay, Sensex is a index of Bombay Stock Exchange comprising of 30 stocks. Okay, these are those 30 stocks we called it as blue chip, right? HDFC, TCS, Infosys, your Bajaj, Birlas of the world. So if you invested in this index stocks, your 100 rupees invested would have grown to 5,122. Now that does not mean all the money has to go to equities. What you need to understand is, if you see the 3 lines which are the FD, PPF and the gold line, they are majorly flat. But if you see the yellow line which is of equities, it is going up, very up and down. Can you see here? Compared to the rest of it. So money will be made, wealth will be created, but what you need to keep in mind is the volatility. What is volatility? The risk. Okay? So that is important to be kept in mind while you're taking an equity exposure in your portfolio. I'll skip this slide because you guys are not able to see it. But yeah, how to invest in equities? Easy. Easiest people say these days is to set up a demat account and start buying stocks. Now, how many of you are able to do that? It's a very concentrated risk. कितना पैसा बनाया अभी तक? कितना invest करके और कितना hours डाल के? Is it easy? I'm glad you said that. Right? So day trading is for fun, it's not for investment. So please remember, when you start doing, whoever says that I made money, this question has to be asked. What are the number of hours you invested to learn that, to buy something, and then keep watching it? Right? Because stock markets open at 9:15 in the morning, and it goes on until 3:30 in the evening. Right? So easiest way to start, we generally recommend at your age, start an SIP. So mutual funds, you can invest 2 ways. Lump sum, you have the money today and invest, or SIP, right? Systematic investment plan. Now, if you invest systematically, and where to invest? Start in an index fund. So that by investing 500 rupees a month, you can actually take exposure to 30 to 50 companies in one index. Okay? So as markets grow, your money will also grow. Right? So you all have the delegate kit. Yeah? There's an envelope in that, folder in that. Please open. मुझे एक चाहिए envelope. There is a wheel in it. Yeah? Okay, so, yeah. Everybody has it? Right, so, when you're looking at the wheel, okay, so there are two sides of it, which says SIP, and other side says SIP inflation adjusted. Right, I want you to see the SIP side. Ready? Ready? Yeah? So if you can see the blue circle outside, where it's written 10 lakh, 25 lakh, 50 lakh, 1 crore and 5 crore. Can you see? So let's talk on the 10 lakh side first. Okay? Now move, this wheel, internal circle will move. Okay? So if I say, I want to invest into, I want to have 10 lakhs accumulated in 10 years. Okay? And I will invest into an instrument which will grow at 12%. So what is the monthly investment required? Yes? खाना सबका हजम हो चुका है, आवाज नहीं आ रही है. Yes, 4347. Right? Did you get it? How to read that? So if you want to have accumulation of 10 lakhs in 10 years, okay, if you invest 4347 rupees per month without any breaking it in between into an asset class which will give 12% annually, you will be able to make that 10 lakhs. Okay, so now let's see the bigger picture. What if I want to have 5 crore in 20 years? 5 crore in 20 years into an instrument growing at, 12%. What's the monthly investment required? Yes, 50,543. Right? So if you're going to consistently invest, you will be able to achieve this target. Okay, so this one is for you guys to take back and set your targets. Okay? Right? Let's go ahead. Right? So why mutual funds? Safest way of retail investors to get equity exposure. It's very transparent. Products are very easy to compare, category-wise. There are 44 mutual fund companies. You can invest in any of them. Everybody with me? I don't think so. Yeah? So it can be started digitally within, if you are carrying all your documents, you have everything in hand, you can actually start investing within 2 to 3 hours. Isn't it easy? So rather than spending that 50% discount pay, which are not really required, let's start with a basic 500 rupee SIP. You guys are so young. Nobody told me when I was of your age, believe me. Okay? At this age, if you start, the amount of corpus that you will create for yourself will be immense. And we don't have, social security in our country. Right? So we have to create our own pensions. Right? So if you are going to invest smallest amount of your income by starting small today, it will create a corpus for you. Right? So there's a magic called compounding, 8th wonder of the world. Right? Albert Einstein says this. So sabko Albert Einstein pata hai? Right? So see the magic that he has shown over here. Right? Little bit of maths, okay? 10% compound interest for 25 years would not be 250%, but it will be 985%. Calculate करके देखना Excel पे कभी. right? So we feel that all the money that we have, we put in fixed deposit. Technically, that money is not growing for you. You're becoming poorer because that money, the potential of the money is much more higher when you have time by your side, right? Right? One small example over here. Ram and Sham, two friends. Ram says, I'll start investing 20,000 a month. Sham says, nahi, nahi, main zindagi ke maze lunga. I will invest only at 45. So he starts at 45 with monthly investment of 20,000. Both will retire at age 60. Look at the corpus Ram will retire with. Ram will retire with 7 crores and Sham will retire only with 1 crore. What has worked over here? The time. Power of compounding has worked for Ram because he disciplinedly invested from age 30 to 60. And it's not a big chunk that he's done that. Sir, when we speak about equities, it says invest in equities is subject to market risk, right? So it same applies over here too, right? So same again, another example, when Ram still says, मैं consistently, disciplinedly invest करूँगा. Sham says, I'll still have ज़िंदगी के मज़े and invest from age 45. But now I will double my corpus. Instead of 20, I'll do 40. Now look at the corpus he's still left behind with. Ram has 7 crores and Sham has 2 crores, right? So what is the crux of this? That disciplined investing consistently would make you rich. And we're going to be, because please remember, हमें pensions नहीं मिलने वाली है. We don't have social security in our country yet. And I just heard something yesterday that if 100 babies are born in the world, 70 are by Indians. Okay, so हमारी social security इतनी जल्दी नहीं आने वाली है, right? Right, rule number 4, insurance is not an investment. Right, every family, we generally have a insurance agent connected where somebody will try to come and sell you an insurance product. So make sure that you're buying your needs and not somebody else's need. Anytime you invest, what is 3 factors important: whether it is tax efficient, whether it is right for you, whether it is beating inflation, and then that product is going to be right for you. If I am your friend and I keep telling you, hey, you should buy this, you should buy this, no. That is not supposed to be the way you invest. And suppose if you say, Nisha invested, she made a lot of money, I will also go and do the same thing. No, you're not supposed to do that. What is right for you is the way, right thing, right product for you. Right? A typical middle class family where we say we'll invest into traditional plans of insurance, 35 trillion is the amount which is invested in these life insurance products. Right? And in our country, life insurance companies are more than 25. Okay? So please remember, मैं Colgate use करता हूँ, close-up वाला ऐसा नहीं होता है. Right? मैं toothpaste use करती हूँ, close-up वाला. So same way, when we are looking at life insurances, we need to know the complete bucket. Okay? So that's the number of zeros which are invested into your traditional products of life insurance because you're trying to mix insurance and investment. Right? So when you're talking about, you all had lunch right now? दाल सब्जी मीठा सब खाया तो सब अलग अलग बाउल्स में थे कि एक ही बाउल में सब मिक्स करके दिया था अलग अलग था ना तो इन्वेस्टमेंट को अलग रखना है और इंश्योरेंस को अलग रखना है सो इन इंश्योरेंस व्हाट यू नीड टू बाय इज लाइफ इंश्योरेंस में टर्म प्लान ओके एवरी कंपनी हैज दिस प्रोडक्ट इट्स अ चीपेस्ट फॉर्म ऑफ लाइफ इंश्योरेंस अवेलेबल इन आवर कंट्री younger the cheaper is the thumb rule for this okay so when you are going to go out in the world and start earning income, you need to buy is term plan when you have dependents and liabilities on you, right? So if somebody is trying to sell, so my business secret I'm going to tell you, if you're going to buy a traditional plan, you call me and tell me, Nisha, मुझे एक traditional plan लेना है, guaranteed होना चाहिए सब कुछ उसके अंदर, I will make more money than what you will make in that plan. I'm telling you. Because when you buy an insurance plan for investment, it's kind of a non-divorceable marriage. Okay, you have to be in it for that 20, 25 years, right? I'm going to skip this slide a little bit. I'm going to rush through fast. Because these traditional products will give returns in the range of 3 to 5%. Adequate covers are not important because so you guys ride a vehicle, ride a bike or drive a car, right? So you buy motor insurance. क्यों? गाड़ी को कुछ हुआ तो लाइफ इंश्योरेंस के बारे में सोचा है, मेरे लाइफ को कुछ हुआ तो मुझे क्या मिलेगा, मेरे फैमिली को क्या मिलेगा, right? So what is important? Have a life insurance, right? In form of only term plan. Right? I already covered this. Younger the cheaper, thumb rule. Generally, so when I bought a term plan when I was 25, I pay 4,000 rupees for a 1 crore cover. And today, if I want to buy that, I have to pay 25,000 for a 1 crore cover. Because when I bought it, I was very young. For insurance company, I'm the least risk. And it is to be bought only when you have liabilities and dependents. Right? So that was on the insurance side. Yes, health insurance, very important part because we love the pizzas and the burgers of the world, right? So we rather, before we catch up on the ailments, we buy our health insurance, be it smaller, 5 to 10 lakhs is also good to start. And insurances, especially life and health both, have to be bought when you think you don't need them. That is the time you go and buy because the day you think you need it, you will not get it because you've already caught up on ailments. Don't DIY please, because अगर मैं Google में देख के आई कि मेरी आँखों में क्या हो रहा है और मैं आपको आके पूछूंगी तो आपको बुरा लगेगा, right? तो same way, financial products also can't be DIY because it's your hard-earned money, your time invested also, right? And make sure that you are renewing your health policies as long as you live, right? And make sure you're doing all the declarations. Anything that you hide while buying a policy, insurers will use it against you as a non-disclosure, okay? Real estate, I think we all have, we are Indians, we believe more in owning than renting. But believe me, in metro cities, it's worth having it, having it as a rental. Because today I live in Bangalore, I might like this city. But when I'm going to be 60, I might not want to stay in this city. I want to go and stay somewhere in a smaller town, right? So rather create financial assets today and not pay, if not required, don't take that housing loan and pay that interest. Okay, the amount of interest that you pay, generally people calculate and forget. Okay, so example, say a client will say, we bought a house in 60 lakhs, 40 lakhs was loan, 20 lakhs we paid as down payment. This is 10 years ago. Now after 10 years, she's telling me that 10 years ke baad today the house value is 1 crore. Now when she bought that house for 40 lakhs loan, the interest paid is 25 lakhs. Right, so 20 down payment, 40 ka her total loan, तो 60 तो ऐसे ही हो गया, another 25 was interest. तो 85 हो गया, तो profit is technically 15 lakhs. Right? When you put into return terms on table, it's not even more than 8 to 9%. So for that longer, you're running a loan. Right? So do the right thing which is required. Right? So renting versus buying, very important. You have to do the maths. Whether it's really worth it or investment के लिए घर खरीदना, I think आजकल के लिए it's very difficult. I mean, not a great decision. Right? My last point is done. Additional rules. Always remember a high return, okay, will come with very high risk. Loans के चक्कर में जितनी ज़रूरत है उतना ही जाना है. Personal loan नहीं लेना है. And especially, so even eventually you guys will plan to marry, right? Taking loans, personal loans for marriage, rather save it from today. Okay, I mean, biggest debt traps when we meet couples, 20 lakhs people take loan for getting married. Okay, not a great way of getting married, very expensive affair, right? You want to get rich faster, rather go and buy a lottery ticket, or go to Goa's casino and play that money today. Okay, and not do that. Right, and there is no shortcut to wealth creation. Right, the wheel that we saw right now, you saw the wealth creation happens, but when you do it disciplinedly and consistently. Right? Okay, so we are in the startup city of country. I should not say this, but believe me, when you start a journey, it is not easy. Okay, startups are very hard work. You have to forget work-life balance and everything that you desire to do. So make sure that you just don't jump into something which is you're not thought of. After jumping, you can't decide, right? Investing is a long, patient game. Good money habits will get you there faster. So if you are having investing breakups done well, your spend, income, spend and invest. So first has to go investment. 100 rupees income hai, 20-30% has to go towards investing. Then you do expenses which are necessity, which are needs, and then go to wants if anything is left. Don't do the reverse. Okay? So last slide. Yeah. There's one very interesting movie on YouTube, okay? I want you guys to watch this movie called One Idiot, okay? It's by IDFC Foundation. And you want your parents to watch it, you tell them to watch Return of One Idiot. Okay? Both of the movies, even you can watch it, but it has an immense basics of information given on that, which will give you another path through, after even listening to me too, okay? If you want to read books, these are basic resources which are available, books and blogs. And yeah, please do have a hobby apart from your work. Very important as we are growing older, right? So journey of 1,000 miles begins with the first step. Make sure you take your first step today by at least start planning, okay, I'll invest. Okay, take that step today, right? So any doubts, you can reach out to me. That's my number and email. You have a brochure in the delegate kit called Promote. That's part of the delegate kit. You can reach out to me, drop an email, send me a hi on Instagram. I will be very happy to interact with you all. Thank you so much.